Hi everyone, it's Adam Cockburn here at Lowe Co, and today we are looking at the Wellington real estate market data for the month of March 2022, comparing it to 1 and 2 years ago respectively, and looking at the trends in the marketplace. And goodness me, is it ever interesting times in the market. We'll see that the values in the Wellington marketplace, as according to the house price index, are the same as a year ago. So whatever growth we saw since March last year has now been eroded overall across the Wellington region, and we have more supply on the Trade Me than we have seen any time since June 2015. And so my message to the buyers out there is get amongst it. Do not wait for conditions to get better. So let's get into the details. Median sale price. Now please bear in mind that the median sale price is not my favourite indicator of actual underlying value. What this does is it literally looks at what was the middle point of the sale price of the sale prices in that month. So if you get a month where you get a large number of expensive houses being sold, the median sale price tends to be dragged upwards, and the reverse is true if you get cheaper houses being sold. That doesn't necessarily reflect the underlying value of property, it just reflects the mix of properties being sold. So that being said, it's still interesting to look at the trends. And March 2022, median sale price just over 939,000, compared to 880 a year ago, March 2021. That's up 7%. 7% is still a reasonable uptick. However, it is the lowest increase we've seen for quite some time. And indeed, if you look at the last 6 months there, those blue bar charts, you'll see it's been leveling, bouncing around between 950 and sort of high 900s for the last 6 months. And the most recent month in March is down compared to many of those months. The red line, of course, that shows you the 6-month moving average continues to go up. However, bear in mind, as I said before, it's the median house price as opposed to the underlying house values. And so the best indicator really of underlying house price values is the Real Estate Institute House Price Index. And if we look at that now, we see really quite dramatic results over the last month and the last quarter. If we look here at the last month for the Wellington region, it is showing a decline in values of almost 5% across the whole of the Wellington region. And if you drill down into the Pororua, Upper Hutt, Lower Hutt, Wellington City, you'll see there that Lower Hutt even dropped by 6.4%. Now let's not get too excited about this, folks. This doesn't suggest that prices are falling off a cliff. The results from month to month, even though it is by far the best indicator of underlying values, it still can bounce around a little bit. The bigger the sample size, the more reliable the indicator is, and so the Wellington region indicator is more reliable than the smaller regions within Wellington. So Wellington region at minus 4.7, still quite a dramatic result. Again, even at that level, from month to month, it can bounce around a little bit. So I prefer really to look at the 3-month number. And on a 3-month basis in the Wellington region, down by 6.4%. 7% Wellington City, nearly 8% Lower Hutt City, and so on it goes. So minus 6.4% over the last 3 months, that is also quite a decent drop. Now, is this going to continue? That's the question on everyone's minds. And this doesn't necessarily mean that, and history has shown that when prices do decline, they generally don't decline all that much and for all that long. What tends to happen, certainly in Wellington and I'm sure other places too, is that once it hits that sort of bottom level, it then just goes sideways for a number of years. How long would that be? Well, past recessions or past slow phases have lasted anywhere between 2 years, and the GFC, of course, that was about 8 or 9 years. Or 8 years, sorry. So it can be a long time. It can also be a short time. So, but anyway, the data is the data. It doesn't lie. Minus 6.4% over the last 3 months. And if we look at the last year for Wellington region, you can see a movement of just over 0% over the last 12 months. So let's just call that zero. So what that means, of course, is that we've seen no value increase overall in the Wellington region over the last 12 months. Whatever value increase we saw since last March has since been eroded. And so again, this is generally good news for buyers, not such great news for sellers. But of course, remember, this is just the last year's numbers or so. Before that, we had 5 years of the most incredible boom ever. So the vendor was out there. Don't get too fascinated by the last 6 months of price falls, remember, you've had absolutely astronomical price rises in the 5 years prior to that. But nonetheless, interesting times. It's been a number of years since we've seen sort of consistent price falls across the board. You see there that it's largely a New Zealand phenomenon as well. Wellington does seem to be leading the charge, and it does seem to be prices or values do seem to be falling a little faster than in most other places around the country. And if you look there at the house price index graph there, the blue line shows the monthly results and the orange line shows the 3 monthly results. You'll see that the blue line does bounce around a little bit more than the orange line for obvious reasons. And the orange line you see there, it fell negative, that's the 3-month moving average, fell negative over there between the December and January months there. So for the last 3 months, for the last 3 consecutive months, we have seen negative 3 monthly growth in price values in the Wellington region. So let's look now at the supply side of things. How many new listings are coming onto the market in the Wellington region? And the answer is quite a lot. So 943 listings in March 2022 versus 804 a year earlier and 748 2 years earlier. So that's 17% more than a year ago and 26% more than 2 years ago. Bear in mind, folks, that March 2020, of course, COVID was just on the horizon, and so we were starting to see a little caution come into the market. We weren't in lockdown, although lockdown was coming soon. But nonetheless, you can see there the trend is quite clear. In that red line, you can see that we are up over the 800 mark for the 6-month moving average, and it is the first time that that red line has ticked over the 800 mark since way back in early 2016. So certainly we are seeing more listings come to the market in Wellington than we've seen for about 6 years or so. What about the other side of things? How many sales are taking properties off the market? How many sales are transacting at the moment in the Wellington region? And the opposite is true here. So not many compared to what's normal. So 610 in March versus 928 a year ago and 774 2 years ago. So that's 34% down compared to the same month 1 year ago, and that is a dramatic shift. The number of sales taking place, similar with the number of listings coming on, these numbers don't tend to increase enormously or decrease enormously. So the fact that you're seeing 34% down on a year ago, that is a big shift. And again, if you look at that red line, you can see there we're about at that 600 level. And there's only one time since I've started collecting this data over 7 years or so that red line has dipped below 600. And if you look at when that was lockdown. So the only time we have been selling fewer properties in the Wellington region is when the market was literally closed down for business, or just about. So that goes to show that this is really quite an extreme result. The amount of sales taking place certainly has slowed right down. So let's look at now the time to sell, and of course if you're seeing more properties come to the market and you're seeing fewer sales taking place, that is sending a message out to buyers that there's no great hurry. A lot of buyers are now thinking, well, there's no FOMO anymore. In fact, what some buyers are thinking is, if I wait another 3 months, maybe prices will fall a bit and I'll save money. So that does not incentivize them to get out there and transact today. I'll come back to that later, but I think that could be the wrong decision to take. But anyway, 42 days to sell a property in March 2022 versus 28 and 27 1 and 2 years ago respectively. So 42 days, that's a roughly 50% longer than a year ago and 2 years ago. It has been quite some time since we've seen duration to sell sort of consistently over 40 days. You'll see in January and February there, we were up in the high 40s. That's an extreme result for February. Not so extreme for January, because January typically does take longer to sell when properties have sold in January, because they tend to be properties that were listed end of November, start of December, and didn't sell in November for some reason, and so they took a long time to sell. By the time they did sell in January, that's quite normal. February, that was an extreme result, and it's continued to be quite a long time in even March, 42 days. So again, if you look at that trend, you see that red line, it has been consistently creeping up since we came out of lockdown. Well, immediately out of lockdown it went down, and then after that market rush, sort of from late 2020 onwards, it has been consistently creeping upwards, but far more so in the last 6 months or so. And indeed, if you look back across the duration of this graph here, you'll see it's way back in late 2015 or early 2016, since we have seen 6-month moving average at around that 38, 39, 40 days. So, compared to recent times, indeed, it is taking quite a long time to sell property in Wellington. How much inventory have we got on the market? Now, remember, folks, what this is saying is how many weeks would it take to clear every one of the listings on the market today if properties continued to sell at the same rate and nothing more came on the market? And the answer is 17 weeks. Now, 17 weeks compared to a lot of other locations around the country is not a long time, but compared to what's normal in Wellington, that is extreme. Once again, look at the trend of this graph over the last 7 years or so. The last time we saw 17 weeks worth of inventory was literally this time 7 years ago, March 2015. Never since then has it been at this level over that period of time. So again, this does paint quite a clear picture that we are seeing quite an extreme change in the market, and we are seeing the market running at levels that we have not seen for quite a number of years, 6 or 7 years, 7 in this instance. So a year ago, rather than 17 weeks worth of supply, we had 6. So the amount of inventory we got on the market in March is almost 3 times what it was a year ago. And compared to 7 weeks, so that's 150% up compared to 2 years ago. So the inventory is very, very high indeed. And again, you can see that trend in the red line. It looks like a hockey stick. So what about the gross quantum of listings? How many listings are actually on Trade Me? And you will remember, no doubt, if you've been in the market at all over the last few years, the major complaint or the major observation has been that we are massively short of stock. And that is translated into basically supporting the notion that there is this terrible housing crisis in New Zealand in terms of not nearly enough properties in the country. Now, of course, I would like to point out that the number of properties on the market for sale does not necessarily indicate how many properties are in the country. If there are very few properties on Trade Me, it doesn't necessarily mean there are no houses in the country. It just means that there are not many for sale. Now, I know I'm stating the obvious, and I apologise for that, but and in this instance, the reason that Trade Me volumes have been so low for a number of years is not necessarily because there have been nothing coming on the market. It has been that the number of sales have been exceeding the number of listings. Now, again, that's stating the obvious, but it doesn't hurt to state the obvious sometimes. Because I think there's been a bit of a misunderstanding that there have been no properties for sale. It is simply not the case. There's been plenty come on the market, or just as much as normal, but there have been way more sales taking place, and so that has meant that the number of listings available at any point in time has been low. But not over the last 6 or 8 months. That has all turned around. Once again, it looks like a hockey stick. So 2,966 listings on Trade Me compared to 1,177 a year ago and 1,527 2 years ago. So that's 10 listings today for every 4 that were on the market a year ago. So it's an extreme turnaround, and again, the shape of that graph clearly shows that. Again, it's like a hockey stick. The last time we saw this many listings on Trade Me in the Wellington region was way back in June 2015. So we're having to go back a long, long time before we're seeing the market at this level in terms of supply. So just to summarise, folks, median prices are up slightly in Wellington, but values are down to the same level as we saw a year ago, roughly. New listings are up, sales volumes are down, duration to sell is up quite a bit, by about 50%. The inventory is up massively, almost 3 times the amount of inventory on the market today as we saw a year ago. We have way more Trade Me listings. There is a massive amount of choice for those of you who are buyers at the moment. More listings than any time since 2015 in June. So look, folks, my overall message to those of you who are buyers, because I know that some of the buyers out there are thinking, should I buy now or should I wait 3 months and maybe I'll pay cheap, maybe I'll get it for a cheaper price? I suggest that is a false economy, and there's 2 reasons for that. Number one, I think at the moment, especially the first home buyer segment, the CCCFA rules have really knocked a lot of first home buyers out of the market. These buyers want to transact, but they can't, and so they are on the sidelines getting their finances back in order. And so I suggest that we're going to see a lot of these first home buyers come back into the market in the next few months, and that will make competition much more intense again for those of you who are in the buying space. I'm not suggesting that will push prices back up again, but I'm suggesting that perhaps it could arrest any further falls and just make it more difficult for you to transact because there are more buyers to compete with. And secondly, and of course, we've also got the banks who are relaxing the triple CFA rules, which will make it easier generally for buyers to get their finance. So that just re-emphasises my first point. And secondly, of course, interest rates are on the rise. So if you borrow money today, chances are you're going to be borrowing money cheaper than you are if you're borrowing money in 3 or 6 months' time. So overall, my message is that if you're in the buying space, if you can raise the finance to buy it now, then get out there and do it. Don't wait for conditions to get any better for you. They may not do so, and your mortgage repayments might be higher in a few months' time. Anyway, that's all I got for you today. If you want any specific advice, want to chat about anything real estate, want an appraisal on your property, you know how to reach me. It's Adam here at Lowe Co. Thanks very much for checking in. See you next month.